Hey everyone, it's Bob with another FinOp Controller webcast. This week we're going to discuss filing the reserve calculation within the focus report, and in addition, how we're going to reconcile the reserve calculation back to the balance sheet that's in the focus report. We'll look at a couple of reserve line items, customer debits and fails to receive, and we'll show how the amounts reported relate to the month-end reserve calculation and the focus balance sheet. The transactions slide will represent items from a usual accounting close, meaning estimates are replaced by actuals, suspense account items are properly reclassified, and items needed for reporting under GAAP are recorded in the accounts. These items need to be classified correctly for the reserve calculation as well as for the focus balance sheet and the income statement. Now, recons are highly specific to the accounting system used by the firm. Therefore, this demonstration is a generic representation of the process used to prove the reserve numbers represent the final balances recorded by the firm. If you're using Excel to produce your focus report, and consider building into your workbook the recons themselves. All right, a few disclaimers and notes before we get started. First of all, I want to tell you that this is not legal advice. If you're doing an actual reserve calculation, then I'm going to refer you to the FINRA website where you can get a copy of their interpretations for financial and operational rules. Also, I think the best way to make use of this presentation is to review it versus your firm's calculation and to compare the various items. In addition to the weekly reserve calc, a calculation is performed as of the last day of the month. Now, if your firm does weekly calculations versus daily, then there will be weeks when you perform two calculations, the usual Monday as of Friday close, and the last day of the month calc. The next week, you will not have to perform a calc. This means is that for firms doing weekly calculations, the firm will have performed a minimum of 52 calculations during a year, one per week. If the month ends on a Monday, you'll perform calculations on Monday and Tuesday. You'll still need to make a deposit based on Monday's results, even if the Tuesday calc is a withdrawal. Now, the firm will report the month-end reserve calc in the focus report, and you should expect changes between the month-end calc and the amounts reported in the focus due to the closing process. You should be able to pinpoint these changes and explain the differences, and you should be able to tie out the focus reserve calculation to the focus balance sheet. Now, before we get started, let's talk about the Excel workbook. For example, the data flow between worksheets. And within there, I tend to build workbooks that have at least 4 different sheets. The first one's going to have input sheets or links to the accounting software, so you'll get your information for your trial balance, reserve calc, operations data, etc. You're going to have calculation sheets for the calculation itself, net capital, the reserve calc. Also, if you need to make changes to the balance sheet or the income statement that wasn't done by the accounting close process. For me, I'm going to also include finish sheets that look like the focus form itself, and I'm going to use that as the reviewer to verify that all the data was uploaded to FINRA and the NFA. And to upload that data, I am going to have an export data sheet. I'm going to use that to upload the information to the FINRA and the NFA websites. Now, over to the right, you can see a few good practices for building workbooks. First of all, copy and paste. Don't key punch if possible. You want to lock down your cells and the sheets themselves to prevent damage to formulas. You want to build data checks into your worksheets to verify all the data was used. In other words, the balance sheet and the P&L ties back to the trial balance. The reserve calc ties back to the balance sheet, or the operations information pages in the back that they tie to the net capital and balance sheet accounts. Transactions for this example. There's a $25,000 deposit that's recorded in a suspense account. It belongs to a customer with a debit. We're going to assume that this particular customer is fully collateralized and that there's no problems with partly secured or unsecured accounts. So we're going to reduce the customer debits by that $25,000. We were using an interest receivable estimate, and that was understated by $95,000 for the weekly reserve. Therefore, we're going to increase that interest receivable by $95,000. Accounting recorded $60,000 for commissions receivable on a trade date basis. As you know, the reserve calculation is done on a settlement date basis, so we'll need to back that out. The secured portion of partly secured debits is $150,000. that may or may not have been recorded by the accounting close. Therefore, we're going to have to make an adjustment for that because that's going to show up on a separate line item in the focus balance sheet, and that amount should be included in the reserve calculation. During the close process, accounting determined that the allowance for doubtful accounts should be reduced by $16,000. Your firm may or may not have an allowance for doubtful accounts simply because of the margin department and the collateralization process that's used for margins. This is for the example. Just go ahead and take a look and see whether you use this or not. For the fails to receive, that was overstated by $18,000. A contract was closed but not recorded on the last day of the month, and that's going to reduce our fails to receive. And in addition, we've made this example, so we assumed it allocated versus failed to deliver, and therefore the allocation's got to be adjusted also. Finally, the NSCC clearing balance is recorded on a net basis on the balance sheet. We're going to have to make an adjustment for that for the reserve calculation itself. These slides show the focus report in at least the 2 pages we're looking at. This particular one here is for the reserve calculation. You can see we are looking at line 4440. We're going to have to reconcile that back to the balance sheet. On the balance sheet, you can see here there are lines 310, 320, 330, 335 as allowable. Non-allowable are the 500 series, and finally the total is 820. In this particular example, we didn't do anything with commodity accounts. The process will be the same. This is an example of the intermediate calculation sheet for reserve calculation. You can see up here in this particular column, this is the last day of the month calc. This is when we did the calculation and made a deposit or withdrawal. Over here in this column is the reclass or adjustment. These items, A, B, and C, they could have been done by accounting as an adjustment, and therefore you would find them in the reconciliations for the particular account. Or in fact, they might have been too small, so therefore accounting might not have touched them. And you can make the adjustments here on this focus reconciliation sheet. Here's the amount reported on the focus. This particular one, we tied it out to the trial balance account first, and then we broke it out on these items, unsecured portion of partly secured debits, the unsecured debits, and the secured portion of the partly secured debits. You can see the regular monthly or the weekly calculation that was done. Normally, you don't have to worry about the secured portion of the partly secured debits. They're already included in the calculation. In this particular instance, we're going to back them out so that we can tie back to the balance sheet calculation. And you can hear, again, the allowable, the non-allowable, and the total amounts. And then finally, we're going to add it back in because it is allowable for the reserve calculation. There are some other items here that we're going to go ahead and remove because even though they will show on the balance sheet, they are not used for the reserve calculation. This reconciliation shows that both the reserve calculation and the balance sheet are internally consistent with each other. Moving on, we're going to tie out the customer reserve fails to receive line 4370 to the focus balance sheet, and that will include both the fails to receive line and the clearing org payables line. And here is the balance sheet section, and you can see here it's 19A fails to receive as well as 19D clearing orgs. For this example, the firm is using the alternative method for net capital, and therefore only the total column is completed. If you're going to use the aggregate indebtedness method, then you would also complete both the liabilities and the non-AI liabilities section. It's a 5-step process to reconcile the reserve calc fails to receive back to the focus balance sheet. Step 1, determine which fails to receive and clearing org payables you're not going to use. You do that using the allocation process. Step 2 is to take these amounts, subtract them off from the account balances for fails to receive and clearing org payables. Step 3 is to add in any charges for aged fails to receive. Step 4, if your NSCC CNS balance is shown net, then you gross it up with the fails to deliver. Step 5, sum up all these items together. You'll come back to the reserve calc fails to receive line 4370. A couple of final thoughts on building workbooks. Consider what controls are needed to demonstrate the integrity of the workbook. reconciliations between accounting or operations backup, tie-outs to other focus pages. And remember that regulatory reporting is a second line of defense, and they provide oversight to accounting and operations. Now, the ability to demonstrate what makes up each line item on the focus report allows for analysis regarding the makeup of each line item and gives upper management insight into the areas from a regulatory compliance viewpoint. And finally, the more controls you can build into this will reduce the time spent performing the work and reviewing the output, and will help you create a higher quality product. That's it for this week. If you have any questions regarding this presentation, please send me an email at bob@rmmilburnconsulting.com. Thank you.